Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which has just rejected to the upside quite aggressively this previous level of monthly supply and resistance from which this previous move to the downside was created, which was then broke to the upside. And what we know is that in the market, previous resistance, once it is broken to the upside, becomes support and demand. And in fact, the market tested the support and demand area here and rejected it to the upside, creating a new monthly higher high, which is exactly what you would expect the market to do in a situation like this. So from a monthly standpoint, we can see how the previous high is now broken to the upside. The market is currently trading above that zone, so more bullish price action could be expected. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, we can notice how the market has now established an uptrend. We can notice, in fact, the creation of new weekly higher highs and higher lows. We see a higher high here, higher low, another higher high, another higher low, and now the market has created yet another higher high. So in a situation like this, also from a weekly perspective, more bullish price action could be expected as the market is currently breaking above this zone of previous weekly resistance that, if the market will now successfully close above the zone, will be turned support. And at that point, what we know is that if the previous level of resistance is broken to the upside and becomes support, there is a good probability of seeing a retest of that previous resistance turn support and then a potential rejection to the upside away from the area. Now, dropping down on the daily time frame, what do we see? Well, from a daily perspective, before we go deeper into the technicals of what we have and what kind of structure there is, first, I want to go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing and how they're shifting their orders. And what we can see is that if we look at the data for the JPY, net positions with the last reports have been massively decreased. In fact, institutions went from having minus 102.3k net positions down to having 143.2k net positions. So institutions have been shorting the JPY aggressively with 9,300 shorts added with the last report and 4,700 longs getting closed. So institutions have been shorting the JPY aggressively and closing their longs. Now, if institutions are shorting the JPY, they're actually longing USDJPY because all currencies on the spot are traded against the USD. So now that we are keeping in mind that institutions are longing USDJPY, let's head back to the technical aspect of the market. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also in description, so you never miss new updates. Now, back to the analysis. Well, from a daily perspective, as we were saying, the market has now a very clear impulse to the upside. Now, after an impulse, what you would expect is first the correction and then the continuation to the upside. Now, generally speaking, when you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see that if we look left, all this area here was quite important previous resistance, which is now turned support since the market has broken it to the upside. And this area also has the 50% 0.618 and also actually 0.32 Fibonacci retracement. So actually all this area is a confluence of support zone for this market because it has both the Fibonacci levels and also the previous resistance turn support, both lining up in the same area of price. And inside of a confluence of support zone, you would expect to see more institutional longing, since already we are seeing institutional longing with institutions adding longs and closing their shorts on USDJPY. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what you would expect is that if this market would shift from an intraday bearish to an intraday bullish market, at that point, I definitely wouldn't be surprised to see a potential push higher away from the zone, completing this potential daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.